could just be off the charts in terms of spending.
It could, especially people are buying the goods now in order to prepare, what to wear when they're going on long trips and vacations and anything. So.
Cannot wait. I have the excuse already. Honey, I'm sorry. It's revenge spending.
I'm sorry. We got to get revenge.
No control. Kim Bassine, thank you so much. Kim is a U.S. luxury reporter at Bloomberg News, joining us here in our interactive broker story. Be sure to check out all of his work on Twitter at Kim Bassine and also at Bloomberg.com. All right, let's get back to world and national news. Back to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. Georgia officials say they have charged Robert Aaron Long with 8 counts of murder following yesterday's shootings at several massage parlors in the Atlanta area. Cherokee County Sheriff Frank Reynolds says the 21-year-old may have had a sex addiction.
We believe that he frequented these places in the past and may have been lashing out.
President Joe Biden says he's been updated on the situation.
Just on the telephone, briefed by the Attorney General of the United States and the Director of the FBI. And the investigation is ongoing, and the question of motivation is still to be determined.
6 of the 8 people killed were Asian women, but authorities are not convinced it was a hate crime. While the U.S. COVID-19 vaccination campaign has reached a little more than 20% of the country, not a single state has jabbed that share of its Black or Hispanic populations yet. Bloomberg's Renita Young takes a look.
The Bloomberg Vaccine Tracker shows most states are relatively far from vaccinating 20% of their Black populations. Only 4 states have passed the 15% threshold for Black people. Meanwhile, 19 U.S. states have vaccinated at least 20% of their white populations. 7 states have done just as well with Asian people. And while the tracker finds equity improving in some places, large racial gaps remain. Renita Young, Bloomberg Radio.
The IRS is planning to delay the April 15th tax deadline by about a month to May 17th. It'll give taxpayers and tax preparers some extra time to deal with recent tax changes and pandemic-related issues. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I'm Carol Masser in our Interactive Brokers studio. Joining me once again is Charlie Pellet at Bloomberg News. And Charlie, this story from Dow Jones Wall Street Journal specifically talks about New York raising the curtain for live events.
Exactly. Can't wait. That's why we live in New York.
I know, like waiting for Broadway to reopen, because we know we've had lots of conversations, with how you just couldn't open it productively, financially, in a partial way or in a safe way.
Exactly. And just let me say, the contribution to New York City's economy that Broadway provides is off the charts. Broadway is the reason why, one of many great reasons, but Broadway is a primary reason that people come to visit New York City. Now, just let me point out, too, there was another piece of good news yesterday in terms of live performances, and this is something that New Yorkers will line up and do in the summertime, and that is Shakespeare in the Park, and that's coming back.
That.
Yep, big deal, big deal.
That is a big deal, and I feel like that's so iconic, right? It's been in New York forever, and it's just, if you haven't done it, it's one of the best experiences of seeing Shakespeare in Central Park. It's just under the stars, and it's just incredible. But what's interesting is the story also goes through Lincoln Center coming back to life beginning April 7th. They're going to have a Restart Stages series of outdoor programs. You mentioned the Public Theater, the Delacorte Theater. They're going to have a new take on the Merry Wives of Windsor. That is scheduled to run July 5th to August 29th. City Winery was set to open last year in a new location in Hudson Park. Pandemic delayed those plans. So it looks like they're, I guess, looking to resume dining, this week. I'm trying to read through, but has yet to present any shows.
Indeed. And, of course, there will be restrictions in place. And, yes, it won't be at 100% capacity. But, I can't wait. Can't wait to sit in an audience and watch great performances.
To be fair, Broadway shows also remaining, though, on hold. Major venues from Carnegie Hall to the Metropolitan Opera, they have yet to resume live programs. So they, along with Broadway, they're still on hold. So we'll look for, them to reopen and really keep our fingers crossed there. All right, Charlie, thank you.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Fed stands pat, leaving asset purchases unchanged at $120 billion a month. Stocks rose to records today. Yields on longer maturity U.S. debt retreated from a more than one-year high after the Federal Reserve continued to project near zero interest rates at least through 2023 despite rising inflation concerns. S&P up 11, a gain of 0.3%. The Dow up 189, up by 0.6%. Nasdaq up 53, higher by 0.4%. 10-year yield 1.64%. Gold up $13 the ounce, up 0.8%, 17.44 on gold. And West Texas Intermediate crude up 0.4% at 64.52 a barrel. A headline from the Bloomberg Professional Service: China plans to ask the U.S. to roll back Trump policies, that according to Dow Jones. Recapping, S&P up 11, a gain of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So chips, all right, I had to go here. They're definitely down, or at least it seems that way for Intel. The latest blow coming from Amazon, which is designing its own chips, and it's really another sign of how the semiconductor industry is changing and evolving. Let's get into it with Ian King. He is our semiconductor guru. He's U.S. semiconductor and networking reporter here at Bloomberg News. He's with us on the phone in San Francisco, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. Joel, I have no doubt, like when we get to the end of the year, we're going to talk about semiconductors being, and kind of the disruption, the innovation, and the change, and the shortage will be one of our big stories of the year.
Yeah, the shortage has been one of the stories of the year so far, and there's really not an easy solve there. The capital expenditures to bring about new chip factories are just enormous, and they take decades to basically to come to fruition and be realized. But what's interesting is that companies are already kind of strategically taking different courses, and that's what this story is about. And Ian really centered on Amazon, which is one of just a handful of other big tech companies that are kind of doing the same thing. And this is really them designing their own chips rather than using off-the-shelf models, and then having the typical companies kind of manufacture them on their behalf. And I think what Ian will also talk about here is that we've seen very little innovation in the chip space other than things getting smaller and faster. And now we might see some innovation come out of all of this. So Ian, walk us through what Amazon's doing, because it has as much to do with Amazon's web service as it does anything else.
Yeah, I mean, Amazon and companies like Microsoft and Google have been sort of working around the edges of their own chip business for sort of 5, maybe 6 years. What was really the crucial sort of breakthrough that I think we pointed to in this story was that Amazon's latest chip, a processor called Graviton, actually goes beyond what Intel chips are capable of in performance. And realistically, having your best or one of your biggest customers say to the world, hey, look, what they make is okay, but look what we make, it's even better, is a pretty, change moment in the industry, and particularly for a company that has had up until very recently 99% market share in a very lucrative part of the industry. This is not a great moment, and obviously opens lots of other questions about how technology is going to evolve going forward.
And is this largely, Ian, first of all, I love when I read a story of yours, because I learn more and more about the semiconductor industry and how it all works and operates. But is this largely about, Amazon's customers, in this case, getting a better deal by using something that is backed by an Amazon chip?
Well, if you take what Amazon said at face value, it's everybody gets a better deal apart from Intel. Amazon's argument is, look, our chip is not only a better performing part, it uses less electricity, so that helps their costs. It allows them to pass on some of those savings to some of its customers, and we cited SmugMug, the photo sharing service. And really, when you look at behind the scenes, the biggest cost for a company like Amazon of running these services that we've all come to depend on isn't so much actually buying the chip, it's supplying the chips with power and cooling them. And we put an estimate in there that 15% of the world's electricity will actually be taken up by data centers in as early as 2025 if we carry on at this rate. So that gives you an idea of the economic incentive here that these companies have to do something different.
And a lot of the innovation here, Ian, it seems to be like what mobile has really done has shown how the traditional incumbents in the space, the Intels of the world, weren't prepared to go smaller, and that the chips basically became as much about power management as anything else. So where do we think that the Amazons of the world or the Microsofts of the world that continue to innovate in this space, is it going to be, are the breakthroughs going to come from power management, or will there be other considerations that they're pursuing?
Yeah, I mean, you pointed to the right area. There are really two areas going on. The one is fundamentally, if you design a chip for a mobile phone, it has to survive on a certain amount of battery power, so it must be efficient. If you can make that chip capable enough, then you're making more efficient data centers. So that is something that this new technology has brought into this industry, which was previously the preserve of these muscle cars. The flip side of this, though, and another area of innovation which is happening, is that a lot of the work being done in these data centers is now AI computing, automated voice recognition, image recognition, and everything from there. And these CPUs that have been the backbone of these systems, really technology that goes back to the 70s, they weren't designed specifically for this kind of work. So I think what Amazon has said it's going to do, and what's happening already, is you're going to see new types of chips that are basically designed for this different kind of data processing. And that in itself, that'll make them faster, it'll make them more efficient than the more general purpose designs we've been getting by with.
So when you think about the suite of companies that are innovating and kind of beginning to design their own chips, what are the money implications here? If we see Amazon and Microsoft and even the Apples of the world start doing this, and Intel suddenly is beginning to lose, kind of some of the marquee clients that it's long had, how will that kind of end up showing up on balance sheets for the Intels of the world, but also for the Amazons of the world?
Yeah, I mean, straight away for Intel, the data center group, about $26 billion of revenue out of a total of 77 last year. That, though, is very, very high margin revenue. You've got to think about it. At the very high end, one of its Xeon chips cost as much as a small car. You're looking at $15,000 per chip. So imagine the profitability on something like that. So straight away, that's obviously not great if you're an Intel investor. If this trend continues, but really for the what I'll call the hyperscalers, the Amazons, the Alphabets, the Microsoft, it's really about cost for them, cost and efficiency. Huge amount of that money is going on feeding these chips and then cooling them down. And that's money, that's just a cost of doing business for them. That doesn't really, it's not an investment in their future. It's just something a burden they have to carry. So if they can lessen that burden, make themselves more efficient, that obviously improves our profitability.
Hey, Ian, just quickly, just about 25 seconds. I feel like we can't have a chip discussion without asking the implications of the acquisition of ARM by NVIDIA. Just quickly, does this play a role here?
Well, everybody uses ARM's technology. The argument that the opponents of this acquisition have said is like, look, if one of the users of ARM's technology takes control of it, then it's not Switzerland, it's not free anymore. We've got to oppose that.
It's just evolving, changing, disrupting. Good stuff. Ian, thank you so much. Joel, thank you so much. Really appreciate it. Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News, on the phone from San Francisco, and Joel Weber, who is editor of Bloomberg Business Week, on the remote access from Brooklyn. That'll do it for this Fed Wednesday, folks. From the Business Week team, have a great and safe evening. I'm Carol Nassar.
Molly Cheng in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the Fed continues to project near zero rates, at least through 2023. Stocks reverse losses. We'll cover how the tech sector fared. Plus, Disney shares get a bounce after CEO Bob Chapek says California's Disneyland will reopen April 30th. That plus the status of Disneyland parks around the world and strides in streaming from my one-on-one interview with him coming up. And it has been nearly a year to the day that Uber CEO Dara Khosrowshahi told us the U.S. shutdown was scarier than 9/11. What are his thoughts today? He'll join me. Plus, Connected Fitness caught fire. I'll also speak to Peloton CEO John Foley. Two important leadership discussions as we cover the pandemic 1 year on. Those big interviews in a moment, but first the markets. U.S. stocks took their cue from the Fed, which signaled it'll hold interest rates steady. Bloomberg's Ed Ludlow and Kriti Gupta will paint the picture for us. Ed, what are you looking at?
Yeah, financial markets kind of giving a collective sigh of relief, particularly in equities markets after the Federal Reserve said that rates would be near zero to at least through 2023. And it was interesting what we saw in equity markets. The S&P 500, which is the main gauge of US equities, closed up 0.3%, but it had been earlier prior to that decision. The most pronounced move we saw was in tech stocks. You see the NASDAQ 100, a very tech-heavy index, closing up 0.4%, but it had been down by as much as 1.5% before the Fed decision came out. A very similar move in the NYSE FANG Plus index, that basket of mega cap tech stocks. And that's been a big story, right? Rising yields, the question around the rate path with those tech stocks that have such stretched valuations. If you look at the US 10-year yield, we actually came off 1 year highs. The yield on the US 10-year, 1.64%. Come with me as my Bloomberg, and let's get some context here by looking at this chart. There has been all this concern about valuations in tech stocks. This chart shows the forward price to earnings ratio of tech stocks relative to the broader S&P 500. Basically, there's a 20% premium right now on tech stocks over the broader index. But if you go all the way back to March 2000, in other words, the dot-com bubble, that was as high as 129%. So now, as I said, there's this collective sigh of relief. We know where we stand with interest rates. We know that those yields have kind of backed off over the last 24 hours or so. So it raises the question, have these valuations on tech stocks got a little more room to climb? Could they go a little bit higher? Because we are no way near the premium that we were about 20 years ago. Finally, I also want to talk about semiconductors. It's such an interesting space to watch right now. The Philadelphia Semiconductor Index, or SOX, you can see it's down 2% over the last week. The jaggedy line tells the story, right? There is volatility here. Samsung out overnight saying that there is this ongoing global chip shortage, that it is continuing.